So General Motors just dropped $888 million. Not on electric vehicles, not on autonomous driving technology, not on the future they've been promising us for the last 5 years. No, they spent it on something that's going to make a lot of people very, very confused. They spent it on a brand new V8 engine. And if that doesn't make your head spin, wait until you hear the rest of this story. Because this isn't just about an engine. This is about one of the most spectacular miscalculations in automotive history. A $7 billion mistake that's forcing America's largest automaker to eat crow and completely reverse course on everything they've been telling us about the future of transportation. Let's start with the headline that probably brought you here. May 28th, 2025. General Motors announces an $888 million investment in their Tonawanda propulsion plant in Buffalo, New York. The purpose? To build the sixth generation of GM's V8 engines. Full-size trucks and SUVs. Internal combustion. The technology that, according to GM themselves just a few years ago, was supposed to be dead by 2035. This is GM's largest single investment in an engine plant ever. Not just recently, ever, in their entire history. At a time when they were supposed to be going all electric, they just made the biggest bet on gas-powered engines they've ever made. Now, to understand why this is so significant, we need to rewind the clock a bit. Let's go back to January 2021. President Biden has just taken office. Climate change is at the top of the agenda. And General Motors CEO Mary Barra stands up and makes a promise that sends shockwaves through the automotive industry. GM will be all electric by 2035. Not mostly electric, not hybrid. All electric. Every single light-duty vehicle they sell will run on batteries. Zero emissions. Zero gasoline. This was their North Star, their guiding vision. Mary Barra said it herself. We have a vision of zero crashes, zero emissions, zero congestion. And they didn't just talk about it. They went all in. $35 billion in investment through 2025. Dozens of new electric models. They converted factories. They built battery plants. They signed massive contracts with suppliers who expanded their operations based on GM's projections. They committed to having the capacity to build 1 million electric vehicles by the end of 2025. The Ultium battery platform. The Ultium Cells joint venture with LG, Factory Zero in Detroit, converted to produce only electric vehicles. The Orion Assembly Plant, being retooled to build electric pickup trucks. Spring Hill in Tennessee, churning out Cadillac EVs. This was the future, and GM was betting everything on it. Fast forward to today. And that future? It's in ruins. Let me give you the numbers, because they're staggering. In the fourth quarter of 2025, General Motors recorded $6 billion in charges related to scaling back their electric vehicle plans. $6 billion with a B. That's on top of a $1.6 billion write-down they took in the third quarter, and another $1.1 billion for restructuring their business in China. Do the math. That's $8.7 billion in losses in just 6 months. But wait, there's more. When you add in the write-downs they took earlier in the year, GM has lost over $6 billion just from reducing EV production. Not from building EVs, from not building as many EVs as they planned. Where does that money go? Well, $4.2 billion of it is cash payments to suppliers. See, when GM told everyone they were going electric, these suppliers believed them. They expanded their factories. They hired workers. They bought equipment. All based on sales projections that GM gave them. And now, those projections were wildly, catastrophically wrong. So GM has to pay them for the contracts they're canceling. Another $1.8 billion is equipment that's now useless. Machinery designed to build electric vehicles that are never going to be built. It's just sitting there, depreciating, worthless. What happened? How did one of the world's largest automakers get it so spectacularly wrong? Let me paint you a picture. It's the third quarter of 2025. GM's EV sales are actually pretty strong. They're selling EVs at record levels. People are rushing into dealerships. Why? Because the federal government offers a $7,500 tax credit for buying an electric vehicle. That's a pretty big incentive. It makes a $40,000 EV cost the same as a $32,500 gas car. And then, September 30th, 2025, the tax credit expires, the Trump administration lets it die. No more $7,500 discount. Fourth quarter of 2025, GM releases their sales numbers. EV sales have fallen 43% in 3 months. From record highs to catastrophic lows, they sold 25,219 electric vehicles. To put that in perspective, they sold over 44,000 Chevy Traverses in the same period. A single gas-powered SUV outsold their entire electric lineup by almost 2-to-1. But it wasn't just the tax credit. The Trump administration also rolled back emissions standards. Remember those tough regulations that were supposed to force automakers to build more EVs? Gone. The pressure that was pushing manufacturers toward electrification? Removed. And suddenly, the business case for electric vehicles completely collapsed. GM had built their entire strategy on 2 assumptions. 1, that government incentives would continue, and 2, that strict emissions regulations would force the market toward EVs. Both assumptions were wrong. And it gets worse, because GM didn't just plan for steady growth. They went all in. They told suppliers they'd need capacity for hundreds of thousands of vehicles. They built factories designed to run multiple shifts, churning out EVs 24/7. They committed to billion-dollar battery plants. The Ultium Cells plant in Lansing, Michigan? GM just sold their stake in it to LG Energy. The plants in Warren, Ohio, and Spring Hill, Tennessee, idled for 6 months. 1,550 workers sent home. Factory Zero in Detroit, the all-electric showcase plant? They laid off over 1,200 workers and cut production from 2 shifts to 1. The Orion plant that was being converted to build the electric Silverado changed plans. It'll now build gas-powered Cadillac Escalades, Chevy Silverados, and GMC Sierras starting in 2027. The very vehicles they were supposed to be phasing out. Now, you might be thinking, okay, so GM made a mistake. They overestimated EV demand. It happens. But here's what makes this story truly remarkable. At the exact same time they're taking billions in losses from their electric vehicle investments, they're pouring money into the technology they were supposed to be abandoning. That $888 million investment in Tonawanda? That's just the beginning. In January 2023, GM had already committed $579 million to their Flint engine operations for these same 6th-generation V8 engines. They put $12 million into Rochester operations for intake manifolds. Another $47 million to Defiance operations for engine block castings. Then in late 2025, $300 million into Romulus propulsion systems for transmissions. Another $250 million into the Parma Metal Center in Ohio. Add it all up, and GM has committed nearly $3 billion to boosting production of gas-powered vehicles over the next several years. This isn't hedging their bets. This is a full reversal. And here's the really interesting part. These new V8 engines, they're not stopgaps. They're not interim solutions while they figure out the EV thing. GM is designing these engines to be more powerful, more efficient, and cleaner than anything they've built before. New combustion technology, advanced thermal management. These are engines designed to last well into the 2030s. The production timeline tells you everything you need to know. The new V8s start production in 2027. That coincides exactly with the launch of the next-generation Silverado and GMC Sierra. Shortly after that, new versions of the Suburban, Tahoe, Yukon, and Escalade. All the vehicles that make GM the most money. All of them getting brand new gas engines designed to compete for the next decade. By 2027, GM will have the newest, most advanced V8 engines in the industry powering their most profitable vehicles. Does that sound like a company that's going all electric by 2035? Let's talk about Mary Barra for a moment, because she's at the center of this story, and her evolution on this issue is fascinating. 2021. We will be all electric by 2035. Clear, unambiguous, definitive. 2024, this transition will happen over decades. Wait, what? Over decades? That's a very different timeline. 2025. We'll be guided by the customer. Translation. We're going to build whatever sells. 2026. GM is now actively lobbying against California's ban on gas-powered vehicle sales by 2035. They're encouraging employees to contact senators to overturn the very regulations they once supported. The company that pledged to eliminate gas-powered options is now fighting to preserve them. The Wall Street Journal's editorial page called her out on it. They pointed out the stunning hypocrisy of a CEO who promised an all-electric future, now campaigning to protect gas vehicles. And they're not wrong. This is whiplash-inducing corporate policy reversal. But here's the thing. Is Mary Barra wrong? Or is she actually responding to reality? Let's look at what consumers are actually saying. AAA did a survey. 63% of Americans are skeptical about electric vehicles. The top reasons? High costs, inadequate charging infrastructure, higher insurance premiums, range anxiety. These aren't irrational fears. These are real concerns that GM discovered the hard way. When you remove the $7,500 incentive, EVs become significantly more expensive than comparable gas vehicles. When you live in an apartment without charging access, an EV doesn't make sense. When you drive long distances regularly and charging stations are sparse, range becomes a real problem. GM believed that these issues would solve themselves, that battery costs would drop fast enough, that charging infrastructure would expand quickly enough, that consumer attitudes would shift rapidly enough. They were wrong on all counts. And they weren't alone. Ford just took a $19.5 billion write-down for scaling back EV production. They canceled the battery-electric F-150 Lightning. The next generation will be a hybrid with a gas engine as a range extender. Stellantis, Porsche, Honda, Jeep, Ram, they've all pulled back on EV plans. The entire industry bet on a future that hasn't materialized. But GM went harder than almost anyone else. And now they're paying the price. Here's where it gets really complicated. Because GM also has a massive engine problem that makes this whole situation even more urgent. April 2025. GM issues a recall for 597,630 trucks and SUVs. The 6.2-liter V8 engine, the L87, has a catastrophic defect. The connecting rods and crankshaft have manufacturing problems. These engines can fail completely while driving. Loss of power, potential crashes, no warning signs. The vehicles affected? 2021 through 2024. Silverados, Sierras, Tahoes, Yukons, Suburbans, and Escalades. GM's bread and butter. Their profit centers. The vehicles that keep the company afloat. And it's not a small problem. GM has received over 28,000 complaints. The defect has been linked to at least 12 crashes and 12 injuries. Some owners report catastrophic engine failures that left them stranded, engines that literally imploded, thousands of dollars in damage. The fix? For engines that pass inspection, a higher viscosity oil, a new oil cap, and new oil filter. For engines that fail, complete replacement. And GM expects to spend $500 million in the second quarter alone to address this recall. But here's what makes it even worse. The recall fix isn't working for everyone. The National Highway Traffic Safety Administration has opened a new investigation because owners are reporting that even after the recall repair, their engines are still failing. Class action lawsuits have been consolidated. Plaintiffs argue that changing the oil isn't enough to fix a fundamental manufacturing defect. So, GM is in this impossible position. Their current V8 engines are failing at scale. Their electric vehicle strategy is hemorrhaging billions. And they need to keep selling full-size trucks and SUVs because that's where all their profit comes from. Enter the $888 million investment. This isn't just about building new engines. This is about survival. GM needs bulletproof V8 engines that won't fail, that won't generate recalls, that won't destroy their reputation. And they need them fast, because their current engines are literally self-destructing. The 6th generation V8 is their answer. New manufacturing processes, better quality control, suppliers they can trust. And the timing is critical. Production starts in 2027, right when the next generation of their most important vehicles launches. But let's zoom out for a second, because there's a bigger question here. Was GM's EV push a mistake, or was it just premature? The argument for it being a mistake: they lost over $7 billion. They laid off thousands of workers. They're now scrambling to rebuild gas engine capacity they were planning to phase out. They made promises to investors, employees, and customers that they can't keep. The 2035 all-electric goal is effectively dead. The argument for it being premature: electric vehicles are still growing, just slower than expected. GM did sell 169,887 EVs in the U.S. in 2025. That's not nothing. The technology is improving. Battery costs are falling. Charging infrastructure is expanding. Maybe they were just 10 years too early. Barra seems to believe it's the latter. She keeps saying EVs are the long-term goal, that it's a superior product, that they'll get there eventually. She's just not putting a timeline on it anymore. But here's what's really interesting. Other manufacturers are taking completely different approaches. Toyota has been skeptical of all-electric from the beginning. They've focused on hybrids, and they're cleaning up in the marketplace. Their hybrid sales are strong and getting stronger. They're also investing in hydrogen fuel cells for trucks. Mazda is prioritizing efficiency improvements in gas engines while slowly adding EVs. Stellantis is bringing back gas-powered muscle cars after their EV versions flopped. The market is clearly saying that there's still a massive appetite for internal combustion engines, especially when they're efficient and well-made. And that brings us to the really fascinating question: is GM actually ahead of the curve now, or behind it? Think about it. They have the newest EV technology in the market, with 9 electric models. But they're also about to have the newest, most advanced V8 engines in the industry. They're developing plug-in hybrids. They're evaluating traditional hybrids. They have options across the entire spectrum of powertrains. Their competitors are either all in on EVs and losing money, or they're stuck with aging gas engine technology. GM is positioning itself to build whatever the market wants. That's actually a pretty strong position, but it came at an enormous cost. $7.6 billion, thousands of jobs, a credibility crisis with investors. A CEO whose legacy has gone from visionary electric vehicle champion to politician who changes with the wind. There's also the tariff situation, which makes everything even more complicated. The Trump administration has imposed tariffs on imported vehicles and parts. GM estimates this will cost them an additional $4 to $5 billion in 2025 alone. Their earnings guidance dropped from up to $15.7 billion to as low as $10 billion. So, GM is getting hit from multiple directions: EV losses, tariff costs, recall expenses. And they're responding by trying to bring more production back to the United States, which requires massive capital investment. That's why these engine plant investments matter so much. Building new V8s in Buffalo, transmissions in Michigan, components in Ohio. It's not just about having the right product. It's about building it in America to avoid tariffs. Barra has been very careful in how she talks about all this. She says they were aggressively expanding EV capacity based on regulatory requirements that have now changed. She says they're reassessing their manufacturing footprint to match consumer demand. She emphasizes flexibility and being responsive to where the customer is. This is corporate speak for "we got it wrong and we're fixing it." But she can't say that directly because it would be admitting to one of the biggest strategic blunders in automotive history. Instead, she frames it as adaptation, as being customer-focused, as maintaining capital discipline while creating jobs. It's a masterclass in damage control. But investors aren't stupid. GM's stock fell when they announced the $6 billion charge. Analysts are asking hard questions about whether GM's EV portfolio can ever be profitable. There's genuine concern about whether the company learned the right lessons from this disaster. And there's the question of what happens next. GM says they expect more EV-related charges in 2026, though they believe they'll be smaller than 2025. They're still negotiating with suppliers about contract cancellations. The full cost of this reversal isn't even known yet. Meanwhile, they're maintaining their capital spending guidance of $10 to $11 billion annually through 2027. That's a lot of money for a company that just lost billions on a failed strategy. The really tricky part is the political dimension. When Biden was president, GM was the EV champion. Mary Barra had his ear. They were aligned on climate policy. The government was supporting the industry with incentives and regulations that favored GM's strategy. Now Trump is president. He's hostile to EV mandates. He's imposing tariffs. He's rolling back emissions standards. And GM has to work with this administration too. So they've pivoted. They're supporting tariffs as a way to level the playing field. They're opposing California's gas vehicle ban. They're emphasizing American manufacturing. Critics call this opportunistic. Defenders call it pragmatic. Whatever you call it, it's a stunning 180-degree turn from where they were just a year ago. There's also a fascinating subplot about what this means for climate change. GM's original plan was built around the idea that electrification was necessary to address emissions, that going all-electric by 2035 was their contribution to fighting climate change. Now they're investing billions in gas engines designed to run through the 2030s. They're not abandoning EVs, but they're clearly not prioritizing them either. So, what happened to the climate commitment? GM's answer is that their new gas engines are much more efficient. Lower emissions, better fuel economy. They can reduce the environmental impact of internal combustion while they wait for EVs to become more viable. It's not zero emissions, but it's better than current technology. Environmentalists are not impressed. They see this as backsliding, as prioritizing short-term profits over long-term sustainability. And they're not entirely wrong. GM is choosing profitability over their climate commitments. But here's the counter-argument. If GM had continued down the EV path and lost tens of billions of dollars, they might have gone bankrupt. And a bankrupt GM doesn't help anyone. At least this way, they survive, they keep employing people, and they can invest in future technology when the market is ready. It's a utilitarian argument. Sometimes the right choice isn't the ideal choice. Sometimes you have to make compromises to survive. Let's talk about the workers for a moment, because they're the ones who really pay the price in all of this. Over 2,700 people laid off or sent home. The workers at Factory Zero who thought they were building the future, now wondering if they have jobs. The battery plant workers idled for 6 months, hoping their jobs come back. The Orion workers who were promised EV production, now facing an uncertain transition back to gas vehicles. These are people who believed GM's vision, who invested in training for electric vehicle production, who thought they were part of the solution to climate change. And now they're collateral damage in a strategic reversal. GM says they're committed to the 2,350 new jobs they announced in 2022 for Orion. They say these plant investments will create jobs, but the workers who've already been laid off don't find that very comforting. There's also a generational divide here. Younger workers tend to be more supportive of electric vehicles. They see it as their future. Older workers remember when hybrids were supposed to take over, and then they didn't. They're more skeptical of the next big thing. And both groups are looking at management, wondering if anyone actually knows what they're doing. Here's what really gets me about this story. It's not just that GM was wrong about EV demand. It's that they were so confident they were right. They went all in. They made definitive statements about timelines. They promised investors, regulators, and customers a specific future. And they were completely wrong. This isn't Monday morning quarterbacking. People were raising concerns about EV adoption rates years ago. Toyota was publicly skeptical. Industry analysts were questioning whether the infrastructure could support mass adoption. Consumers were clearly expressing hesitations. But GM plowed ahead anyway, because they believed they knew better, because they thought government policy would force the market, because they assumed that if you build it, they will come. That assumption cost them over $7 billion. And here's the most important lesson from all of this. The market doesn't care about your vision. It doesn't care about your commitments or your promises or your North Star. The market cares about what consumers actually want, and will actually buy. And if you ignore that reality, the market will destroy you. GM learned that lesson the hard way. The $888 million investment in V8 engines isn't just about fixing their mistake. It's about accepting reality. It's about admitting that the future they promised isn't coming, at least not on the timeline they expected. So, what does this mean for the future of electric vehicles? Are they dead? Is this proof that EVs can't compete with gas engines? No, EVs still have advantages. Instant torque, lower operating costs, no emissions, great driving experience. The technology is still improving. Batteries are getting better and cheaper. Charging is getting faster and more available. But the transition is going to be slower and messier than anyone predicted. It's not going to be a smooth curve from gas to electric. It's going to be fits and starts. Advances and retreats. Companies making bets and losing. Strategies failing and being revised. GM thought they could force the transition through sheer will and massive investment. They were wrong. The transition will happen when the technology is ready, the infrastructure exists, and consumers see value in making the switch, not before. In the meantime, we're going to have a mixed market. EVs for people who they work for. Hybrids for people who want some efficiency, without the range anxiety. And gas engines, really good gas engines, for everyone else. And that brings us back to that $888 million. It's not just an investment in an engine plant. It's GM's admission that they need to be in all these markets. That they can't bet everything on one future. That they need to build what customers want, not what they think customers should want. Is it the right decision? Time will tell. But it's certainly a humbler decision than the one they made in 2021 when they promised an all-electric future. The automotive industry is at a crossroads. Every major manufacturer is trying to figure out the right path forward. Some are betting big on EVs. Some are focusing on hybrids. Some are hedging their bets across multiple technologies. GM has now chosen the hedging strategy. After losing billions by betting too hard on one outcome, they're spreading their risk. It's less exciting than a bold vision of an all-electric future, but it's probably smarter. And maybe that's the real lesson here. In business, as in life, the boldest vision isn't always the right one. Sometimes the right answer is flexibility, adaptability, and a willingness to admit when you're wrong. GM was wrong. They're admitting it, though not in so many words. They're correcting course. They're investing $888 million in the very technology they were supposed to be abandoning. And they're hoping that this time, they've read the market correctly. Only time will tell if they have. But one thing is certain. This is one of the most spectacular reversals in modern automotive history. And it's a cautionary tale about the dangers of believing your own hype, ignoring market signals, and betting everything on a future that may not arrive on schedule. $888 million. The biggest single investment GM has ever made in an engine plant, for a technology they promised to phase out. That's not just fixing a mistake. That's rebuilding from the ground up after everything you believed turned out to be wrong. And that's the story of how General Motors spent $888 million to fix their biggest mistake, thinking they knew the future when they didn't.